And so I've had experience working with dozens and dozens of students across some of the biggest challenges that they're facing with the technicals. As we know, I think most people that are interviewing for investment banking, equity research positions, any kind of finance positions, I think the technical section is one in which scares a lot of people off. But conversely, it's an area in which you can really outshine the competition with the appropriate preparation and the appropriate mindset. And so today, our discussion, it's called Common Sense Technicals, and I'll get into a little bit more detail. But as Oliver said, please feel free to, if you have any questions, enter them into the chat box or unmute yourself and ask a question. I want to make this as conversational as possible for you guys so that we can get the most out of it. So with that, here we go. Oliver said *6 to interrupt at any moment, and feel free to stop me whenever. I won't be offended. Okay, so let's get started with the presentation here. So, okay, really briefly, for some of you who may not have had live interviewing experience or perhaps have never heard of the word technicals, what are technicals? So technicals are questions that are asked by interviewers, hiring managers, current employees, what have you, that are interviewing you and trying to test your understanding of several disciplines, several subject areas that are used in those careers, such as finance, economics, investment concepts, market-related questions, accounting questions, and whatnot. And the kind of mindset you need to have for technicals, a lot of people have asked me, why do technicals matter if I'm a sophomore, I'm a freshman, I haven't even gotten to my first finance class, I haven't had any accounting classes, I don't know anything about investment banking, why would they ask me such difficult questions? So if you look at the right side of the slide here, underneath what purpose do they serve, the first and foremost, the recruiters, the hiring managers, the employers, they're using technical questions as a way to gauge your dedication and interest in the role. What do I mean by that? Even if you have not taken a finance or accounting course, or maybe you just started your finance or accounting course, they want to see that you're being proactive about learning the concepts that are going to be required for the internship. So if you're a sophomore, barely on your first finance class, they want to see that you're leveraging your resources with your finance club at school, leveraging resources online in order to learn more about the subjects that are going to be tested. And through that, they're able to see, oh, okay, this candidate here, you could tell, has spent numerous hours studying and preparing for this interview. And so they're able to use that as a gauge for your interest. At the same time, they use that as a tool to weed out candidates. What do I mean by that? If they notice that a candidate doesn't know even the simplest of technical questions, that candidate obviously is not highly motivated or interested in the position at hand, and they're probably just fishing for an offer. So that's the first and foremost, the biggest reason. Next, they want to understand your analytical thinking process. With that, they want to see that you're thinking through things in a methodical manner, that you can think outside of the box, that you can be handed a complicated problem or an Excel spreadsheet or some numbers or a table, and you be able to turn that around and turn that into a productive insight or produce figures that they're asking you to produce. So by asking you these technical questions, they're able to kind of gauge, is this person analytical in terms of working with figures? And so that's the second purpose. Very importantly, they want to also assess your qualitative and quantitative communication abilities. So with anything in finance, investment banking, equity research, investment management, there's a lot of numbers thrown around, a lot of terminology. As we know, finance is very, very, very terminology heavy. People want to know that you're able to listen actively, because they don't want to, a managing director in investment banking doesn't want to repeat a task or an assignment more than twice, because with so many deals happening, they don't want to spend their time re-explaining things more than once or twice. So they want to know that you're a good listener. Once you've actually carried out the task or the exercise, you have to go back to your associate or your vice president or your managing director. And in this case, I'm using an investment banking example. you have to go back to your associate or VP and say, hey, you gave me this task to perhaps put together multiples for 10 companies in the oil and gas industry, right? You want to be able to explain to them what you did, what you didn't do, why you summarized it this way. And so asking you technical questions is almost a gauge for them to see, can this person explain to me a quantitative or qualitative subject? So that's the third reason. But lastly, more importantly, through your answer to the technical question, they're able to kind of assess whether or not they see themselves working with you on a day-to-day basis, and whether or not you're going to be able to, quote-unquote, hang with them on finance and business problems. And that kind of comes down to not only your technical knowledge, but also your confidence and the way you answer the technical questions. It's not all about knowledge. I've had a lot of candidates, a lot of my students, they know everything that I'm asking them, but the way they answer it is it's not cohesive. It may not be cohesive. So we're going to talk a little bit about having a little bit of structure to your answers and a little bit of confidence. With that, are there any questions with regards to what are technicals and what purpose do they serve? And if nothing, I'll move on to the next slide. Okay. All right.
And just as a reminder, if anybody, nope, that's me, Oliver. Just as a reminder, *6 will unmute you if anybody does have a question.
Great, thank you. Okay, before we dive into specifics, a lot of students have asked me, how do we best prepare for technicals? And what I tell them is really focus on what matters, because if you think about it, there's accounting, there's valuation, there's economics, there's financial markets. There are tons of disciplines that are applicable for finance. And so the last thing you want to do is be completely lost without a roadmap with how to study for technical questions. So let me pull up a PDF here that Modern Guild produced that I really, really like. Here we go. Okay, I think you guys can see my screen here. It's the Finance Industry Knowledge Roadmap, okay? I think you guys have a copy of this, and if not, then Oliver can circulate a copy of this. I really, really like this PDF here. What we have here, let me zoom out real fast. Okay, I think you can see the screen. What we have here across the top, from left to right, these core skills, basically telling you at what level do you need to understand certain topics. So from left to right, we have broad understanding, deeper understanding, and solid understanding. Down the left side here are the different types of topics you are expected to know. Economics, accounting, valuation, capital markets, and M&A. And what I've told my students and what I want you guys to really, really focus on are these 6 quadrants here. I don't know if I can circle it. These 6 quadrants right here. Broad understanding and deeper understanding for economics, accounting, and valuation. This is where about 60, 70, maybe even 80% of your questions are going to fall under these 6 boxes right here. Because, frankly, they might ask you about capital markets, but this stuff starts to get more advanced, and M&A gets a lot more advanced, and they won't be asking you about securitization specific questions about it. They might ask you, have you heard about it? What do you know about it? They might ask you for initial public offering. Have you seen one recently? Have you followed it? What did you think about it? But they're not going to ask you specific questions with regards to IPO. They won't ask you for the details of the IPO. So these 6 boxes here, I would highlight those if you have the screen or write them down. These are the primary area for focus. Stuff like leveraged buyouts, those are nice to understand. It's one of those things I've told my students is every single year it's a very popular topic. I don't know why. I think it just sounds cool. It's one of those things that students just like to know. I'm not sure why. But it's nice. Know it, briefly what it means, what a leveraged buyout is. But don't spin your wheels trying to understand that deeply. Unless you're a junior or a senior and you might be interviewing at a private equity firm that specializes in leveraged buyouts, then yeah, you want to look at that deeply. But for 85% of you, these 6 boxes here are critical. And so I would focus your time on these things. Any questions with regards to these 6 boxes and what they entail, and why I'm saying to kind of not spend as much time on the solid understanding categories for capital markets and M&A? Okay, no questions. So let me go back here. Okay, focus on what matters is what I just said. Okay, next, once you know what you're studying for, which is those 6 boxes predominantly, now my next suggestion is leverage question banks. Why? Because people have historically put together the questions that are most commonly asked during interviews for technicals, okay? And so here in the first link, and Oliver will distribute this PowerPoint afterwards, or you can also find it on Google, is one example. It's 400 questions of an investment banking guide. And it's broken out by different topics, accounting, economics, so forth and so on. Those are very targeted, and they're very easy for you to review them. What I would definitely not recommend you do, and I've told this to my students, is don't consume your accounting book. And what I mean by that is don't try reading it from start to finish, cover to cover, because you're just going to learn a lot of things that frankly will not be tested on an interview. Same with your finance book. Use your finance and accounting textbooks to reinforce certain topics, reinforce specific topics that you might be struggling with, but definitely not to prepare for your interview. Okay, and below what I have here, some other considerations to keep in mind. Review the questions you've already studied. So anecdotally, what I've seen with students across all the grades in college, you might be studying multiples for a couple of weeks, but if you haven't touched that in several weeks, you will, I almost guarantee you will forget certain concepts. Like if you've studied discounted cash flow for 3 weeks and now you moved on to some accounting concepts, you will probably forget certain concepts of discounted cash flow and terminal value. What type of discount rate do we use? And so my suggestion is go back and continue reviewing the questions and concepts you've already studied, even if it's briefly, a little bit every day, a little bit every week, so that you don't forget. And you want to be fresh all the time with these concepts, especially going into an interview. The last bullet point there, identify which questions you are repeatedly getting wrong or not answering succinctly. So there might be questions to which you, frankly, are struggling at explaining or answering repeatedly. At that point, what you have to do is identify those questions and really spend time with one of the guides that I just mentioned, the one I have here on the slide here, or your textbook, understanding the crux of that concept, the details, the nitty-gritty, so that you can explain it to yourself. Once you can explain it to yourself, then you can answer it more succinctly. So identify which questions you're getting wrong every time and work on those. Okay. Any questions on this for preparing, how to prepare for it, how to leverage a question bank, what not to do in preparing, anything like that? Nope. Okay. Alrighty. So now let's get into the business here. Let me see here. Answering the typical technical questions. Okay, so these questions here are probably top 5 or what have you, top 10 most, 3 of the top 10 most frequently asked technical questions. And let me tell you this up front. These questions you need to know and have cold turkey. You just need to know these back of your hand, basically. So the first one, what are the 3 financial statements and what information do they provide us? Walk me through a discounted cash flow and what are the primary valuation methods, okay? For these types of questions, they don't buy you brownie points if you get them right. But if you get them wrong, they could be very detrimental. If you, let's say you got these 3 wrong or you don't know them, that is highly detrimental because these are kind of hurdle questions. These are kind of at a minimum questions. So what I've put together on the right side of the slide here is a little bit of a strategy for how to answer these typical technical questions, okay? So number 1, answer the question asked, please. So for that is, if they're asking you what are the primary evaluation methods, you best respond with the three primary evaluation methods at a minimum, even if you don't provide any context to what they mean, how you use each evaluation method and in what context. At a minimum, you need to answer which are the three primary evaluation methods. Okay? But, you can see the second half of that statement there, but add context or content. That's where your insights are going to show through to the recruiter. What do I mean by context or content? You might say, oh, one of the primary evaluation methods is discounted cash flow, and it's very useful methodology for valuing companies with positive cash flow or what have you, or companies that have negative cash flow right now but positive cash flow into the future. Add a little bit of context so that they know that you're not just regurgitating what the three primary evaluation methods are. Number 2, be systematic and organized. Okay, so when you're answering a question like, what are the three financial statements and what information do they provide us? What I mean by being systematic and organized is say, hey, the three financial statements are the balance sheet, the income statement, and the cash flow statement. List them all up front and don't beat around the bush, kind of talking about one or the other, bouncing from statement to statement. Say, hey, here are the three financial statements. The income statement is used for this, the balance sheet statement is used for this, and the cash flow statement is used for this. You've answered the question of what the three financial statements are and what information they provide, but you've answered it in a systematic and organized manner, which saves you a lot of time during the interview. Feel free to add 1 to 2 extra nuggets of information. What do I mean by that? If let's say, for example, you recently read that perhaps the precedent transactions valuation method is not very effective for the utilities industry or utilities companies because there aren't that many deals in that space, you might throw that in there for a little bit of extra information, kind of to show off a little bit, but don't show off too much, which is my number 4 point. If you're very, very smart and you've studied this stuff in your sleep and you just love answering technical questions, don't overwhelm the interviewer. Don't overwhelm your response. So keep it tight, especially with these technical questions that are very more hurdle questions. Okay. Does that make sense for everyone? And if you have any questions, again, please feel free to ask me through the chat if you feel more confident that way. Okay. All right. So here's the next one. Okay. The typical technical questions in disguise. So this is a tricky one and one that can stumble people quite a bit. Okay. What do I mean by in disguise? It's basically the same question as a typical question, but it just sounds way more intense. Okay. So what are the three primary evaluation methods? It could be rephrased as, how would you think about assessing whether a company is a fair price, undervalued, or overvalued relative to its competitors? Right? That sounds a lot more intense than just what are the three primary evaluation methods. When you hear the second question being asked, you almost go into panic mode. And a lot of my students have done that. They don't know, they just completely lost. They don't know what I'm asking. And so what I'm saying here is there's a way to tackle these types of questions. Okay? So if that happens to you, and it probably will depending on the interviewer and how evil they want to be, the first thing you want to do is buy yourself time if you're confused. Okay, and this is a little nugget that I've told my students and I've used myself in interviewing. When you're asked this question and you have no clue what it's about, what I've said is, oh wow, that's a very interesting question. I've never heard of that, or buy yourself time by saying something like a filler statement, which will buy you 10 seconds of time or 6 seconds of time, enough to at least ignite your brain power to think of an answer for this question. To attempt to think of an answer. So what I've done is, oh, that's an interesting question. Oh, I haven't heard about it that way, or invent anything that's 6 seconds long. While you're saying that, you start to think about what the question is being asked. And step number 2 is find relevant and related context. So when I ask you that second question, how would you think about assessing whether a company is fair price, blah, blah, blah. You heard the word company, okay, so we know we're talking about a company. Fair price, undervalued, or overvalued. Okay, we're talking valuation. See how it's all kind of making sense now? We're talking company, we're talking valuation relative to its competitors. Okay, at that point in your mind, you should be thinking it has something to do with companies, it has something to do with competitors, and something to do with valuation. Then you know, okay, well, what are some methods for valuing a company? And you start to reshape this question and turning it into a more typical question. And that's when you find related content. Number 3, add context. So obviously you're not going to answer this question as if it were a typical technical question. You're going to answer it so that it kind of meets the answer to the question being asked. You're going to throw in the fact that the competitors, you might, if they're talking about, if they give you a company like Microsoft, let's pick Chevron. Is Chevron fairly priced relative to its competitors? You might add in a little bit of context around ExxonMobil or Shell or BP, and say, hey, I would value ExxonMobil, using a discounted cash flow model because it's got really stable cash flows, blah blah blah. But then I would have to look at its competitors like Shell or BP to see what kind of price to earnings, what kind of enterprise value to EBITDA they're trading at. Add a little bit of context so that you're not just answering what are the 3 primary valuation methods. Give a little more color. Number 4, ask for clarification on the question when in doubt. So in this example, you could say, if they ask you that question and they don't give you a company, you could say, can I assume it's a company in the energy industry? Or say, I'm going to assume it's a company in the energy industry, like ExxonMobil, if that's okay. The way I would think about ExxonMobil being valued relative to its competitors is I would look at its cash flow, discounted cash flow, enterprise value. I would look at its multiples and compare those to its competitors. So you're able to ask questions such as, what industry are we in? What do you mean by whether it's fair price, undervalued, or overvalued? Is there a specific metric you're looking for with regards to valuation? And I think that helps you out because it becomes much more of a dialogue as opposed to a one-way conversation. Okay, so in short, there are a lot of questions out there that maybe that may look very scary, but that are just typical technical questions in disguise. And so I think this is a pretty good approach to answering those questions. Okay. Okay. Let's see here. This next one, I asked this question a few times with my students over the summer just to kind of see how they were thinking about valuation, and you'd be surprised how many people struggle with this. So the question is here, and what I'm saying here is think ratios. When you're talking about straight quantitative metrics such as multiples, enterprise value, terminal values, feel free to think ratios where appropriate. And so in this particular slide, the question is, will an infant or startup company, so basically a small company that's growing, would it have a higher or lower multiple than a more comparable but mature competitor in the same industry, right? So when you hear that, it just doesn't make sense, right? You have no idea what's going on here. So I've underlined some keywords. You know that we're comparing an infant or startup company that's public to a company that is in the same industry, same business line, probably same products, probably same services, but it's a mature company, okay? And we're talking about a multiple. When you think about it, a multiple in and of itself by itself, it doesn't sound like, it doesn't give you anything to grab onto. So what you think to yourself is, what is a multiple? Well, for valuation, most commonly, let's price to earnings. I like to use enterprise value to EBITDA. A multiple is enterprise value to EBITDA. It's a ratio, right? And so you think to yourself, okay, lower infant startup company versus mature company, what do the multiples look like? And so, number one, think ratios. In number one here, what I've shown here is infant company, mature company. They each have their multiple. It's enterprise value divided by EBITDA, okay? Now think it through, okay? Think it through, and even it's fine if you think it through in front of the interviewer. Say, hey, you mind if I kind of think through it real quickly? Here's how I'm thinking about it. I've got an infant company, a mature company. They both have a multiple of enterprise value divided by EBITDA. My smart assumption, number 2, is that the EBITDA for an infant company is going to be a lot smaller than the EBITDA for a mature company, right? Because they just started. They're just generating EBITDA. They might even have a near, well, I don't think they have a near, they might have something really small for EBITDA. What does that mean? What does that imply for the ratio for an infant company versus a mature company? Okay, a mature company is going to have a huge EBITDA, right? They're also going to have a huge enterprise value. But what is enterprise value composed of? And so number 3 is think through the remainder of the components. We know that the EBITDA for the infant company is going to be minuscule, right? If anything, it's a growing EBITDA, but right now, the EBITDA figure is a today number, basically a yesterday number. It's a trailing 12-month EBITDA. It's a last quarter annualized EBITDA, any of those variances of EBITDA. It's a historical or today number. What is enterprise value? We know that enterprise value is a function of the free cash flows from a projection period, years 0 through time t. Might be 5 years, 6 years, depending on your projection period. Plus the present value, that should have been present value, plus the present value of the terminal value. Think about Facebook, okay, and use actual companies to help you think through these things, which might have been another suggestion here. Facebook, when it first IPO'd, it probably had a pretty relatively small EBITDA compared to Google or compared to Amazon, any other. Those aren't direct competitors, but you get the point. It might have had a small EBITDA, but a huge enterprise value. Why? Because the enterprise value, as we know from our knowledge of discounted cash flow, is about 60-75% terminal value. And what is terminal value? This is what I'm talking about when thinking through the components. What is terminal value? The free cash flows beyond time t, or beyond year 5, 6, what have you. So for Facebook, the majority of its valuation comes from its terminal value, from its future cash flows. Even though it might not be making a lot of money today, back when it IPO'd, or even before it IPO'd, its valuation was astronomical because of the future value component of the terminal value. So from that regard, you think to yourself, oh, wow, okay, a very infant company will have a huge enterprise value still. You'll still have a big enterprise value because most of it's dependent on the future, but your EBITDA is going to be tiny, right? So your enterprise value will be huge, your numerator is huge, but your EBITDA is small. That implies a large multiple. What about a mature company? Oh, the enterprise value, yeah, it does depend on its terminal value, but the growth rate for a mature company is a lot smaller than an infant company. The enterprise value is large, but so is the EBITDA. So when you take those two into account, they might not be a 1-to-1 ratio, but it's certainly going to be a smaller multiple than an infant company. So when you have questions like these with price to earnings per share, any kind of multiples, enterprise value to EBITDA, price to free cash flow, anything like that, think of the ratios and of the components. Break things down into its respective components, and that'll help you answer a lot of these questions that might be more advanced, if you will. Okay? All right, enough of ratios. Let's see here. Here we go. Everyone's favorite. Okay. Walk me through questions. So these are heavy on the accounting, and I won't say anything bad about accounting, but most of us, accounting is not terribly intuitive because it's like a web of entries everywhere and they're all interconnected. So let me just say this with regards to walk me through questions on the right-hand side. Be very, very organized and confident in your responses to these questions, okay? And what do I mean by that? Number one, go in order, okay? So for this particular question, walk me through how depreciation going up by $10 would affect the statements. Mentally stay organized by talking about the effects on each statement in an organized fashion. Income statement first, cash flow statement second, balance sheet last. Whatever order works best for you. I know some people are more a fan of the cash flow or balance sheet, vice versa. whatever order you want to go in, just stick to that for all these types of questions, okay? Number 2, track your numbers and assume tax, etc., whatnot. So it looks nice, it looks awesome in front of a recruiter when you're saying, yeah, well, if depreciation is $10, but depreciation reduces your operating income and therefore reduces your tax liability, blah, blah, blah. Assume a tax rate and say, I'm going to assume a tax rate of 40%. It's not only is 40% a pretty good ballpark figure for taxes, but the recruiter also knows that you have some kind of business sense, some kind of common sense. If you were to say, oh, I'm going to assume a tax rate of 5%, then that's erroneous, most likely. So track your numbers and assume tax. By track your numbers is it's not going to be $10. The effect is not going to be $10 for all the statements because of the tax implications that we have in the income statement. So keep track of the $10, keep track of the $4 for the tax savings, keep track of the $6, keep track of all those figures because when you're bouncing from statement to statement, you're going to have to mention numbers. So keep track of those. Number 3, so all these walk me through questions are available on all the investment banking question guides, question banks. You're going to have access to all of them. So you might feel like you want to regurgitate the question or the answer based on what you read on a Wall Street Prep PDF. Don't do that because it shows that you kind of, I guess at a minimum regurgitate it, but to go above and beyond and really showcase your abilities, don't regurgitate it. And so the second half of this statement here says, pretend like you are thinking it through. Be natural, be conversational about it. So when I think about depreciation going up, blah, 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 be very natural. Be confident, but be natural. People want to work with somebody that's natural, not with somebody that memorized the entire question bank from Wall Street Prep or Wall Street Oasis or any of those. Okay, because these questions can get very boring going from statement to statement and the effect. All right, so it sounds like no questions so far on the chat. Please feel free to interrupt me at any point as well if you have any questions over the phone. Okay. Okay, here we go. Let me get down to this. So when you get down to an interview, or even maybe not even in an interview, when you're maybe actually at the actual internship, you want to know several figures kind of in your back pocket, so that when you're looking at figures or looking at percentages or metrics, they kind of make sense. So some kind of a benchmark, if you will. Okay, some of these common sense figures that are good to know, discount rate. So obviously the discount rate, the higher the discount rate, the riskier an investment or asset or company is going to be, right? Have a sense for the discount rate. So one example for me, when I was at ExxonMobil, most of our long-term projects, we did discounted cash flow analyses for at discount rates of 10%, 15%, 20%, but it varies based on the riskiness of the project itself. Just have an understanding for that. So if you're valuing a company that might be, let's just pick a very boring company, maybe a utilities company that is mature, has contracts for the next 40 years, it's not going to grow any further, the weighted average cost of capital for that is going to be very low because the cash flows are very stable, non-volatile. So we know that the discount rate for any kind of project or assessment related to that company is going to have a discount rate closer to 10%. It's not going to be over 15, definitely not 20. So have a sense of those figures. Tax rate. Right now, tax rate, effective tax rate, 35, 40%. It's all going to change perhaps in the future, or it might not change, who knows. Just have an understanding that 35, 40% has kind of been historically the effective corporate tax rate. If you're using 50 or 60, that's off. And if you're using 10 or 20, that's off. So just kind of ballpark it there, 35, 40, and know that. For discounted cash flow analyses, we have to use a terminal growth rate for when we're coming up with the terminal value. with the terminal growth rate, as you know from discounted cash flow, is basically at what rate are the revenues or the company is going to grow at kind of into perpetuity, right? So it's not going to be an astronomical figure because it's by laws of physics, I don't know. The company cannot grow at a significant rate forever, right? The company would just blow up. It would blow up the world. So kind of keep in mind a terminal growth rate range, okay? And it's going to vary by industry, so keep that in mind. Perhaps software, fintech, other stuff might have maybe a higher growth rate. Something like pipelines or shipping or logging, what other paper milling industries, those might have like 2% growth rate, if not, 2% or growth rate. So keep those in mind per industry. Okay. Historical GDP growth rate in the U.S. we know has been around 2 to 3%. Historically, that kind of serves as a gauge as to maybe what the future might look like for long-term investment analyses, just to kind of compare where we've been and where we might be headed. Historical inflation, so increase in prices, about 2 to 2.5%. Keep that in mind. And then terminal value. So if you're doing a discounted cash flow analysis and your terminal value is 90%, something's off. If it's 40%, something might be off. So just keep in mind, terminal value constitutes the largest portion of the enterprise value. Why? Because it's the cash flows beyond the projection period at a specified growth rate. So just kind of keep these common sense figures in mind, and they also might help you during interviews as well with the tax rate, the discount rate, the inflation, and the terminal value in the discounted cash flow. And there's nice little nuggets to mention. So when you're interviewing and you're talking, somebody asks you about sensitivities in discounted cash flow, well, you'll say, a terminal value is 60 to 70% usually, depending on the industry, of enterprise value. Therefore, I think that terminal value is one of the areas where it's most sensitive to inputs and assumptions. And then breaking things down into components. What drives the terminal value, right? The growth rate, the discount rate, so forth and so on. Okay. Enough on the common sense figures to know. Let's see here. Okay. Good. So you can use common sense to detect fraudulent thought process or figures. Going back to what I mentioned in the last slide, there are just some numbers that don't make sense. Okay, and as a new entry intern or new hire analyst, you're going to be overwhelmed with a lot of work. You're under pressure, you're tired, maybe you're sleepy. You need to develop an intuition for when a number does not make sense, okay? Because that way you'll spot your errors before your associate or before your vice president spots those errors, okay? We want to minimize that because that's what increases your bonus, okay? So I'll give you an example. This first point here, mature utilities company, okay? Trading at a multiple of 30 times, okay? You know from anecdotally that maybe you heard somewhere that Apple was trading at a multiple of 18, 17, Apple, I don't know what it's trading at, but call it 18, 17, 15 times. And then all of a sudden you see that your analyses produced a multiple of 30 times for XYZ mature utilities company. Something's off, right? Because mature utilities company, the enterprise value is not going to be astronomical. The EBITDA is going to be huge. So you've clearly made a mistake by having a multiple of 30 times, right? Either the EBITDA is very small or it's deteriorating, which could be true. You have to investigate it. So a lot of oil and gas companies, about 2 years ago when price went down, a lot of them had EBITDA that was just cratering. When the EBITDA is cratering, then your multiple can get really high, but for the wrong reasons because it's going bankrupt, okay? Or it could be that your growth prospects and assumptions for enterprise value are very high. Maybe you fat-fingered in, instead of a 3% growth rate, maybe you heard something else, you thought it was 10%, and you put in 10% into the model, and you got an astronomical enterprise value, okay? So just these are things that that'll make more sense as you continue to prepare and go through and take more classes and as you read more of the Wall Street Journal and get more familiar. But these are items that help with the common sense. Okay, second point: compare and confirm when tabulating multiples, and this is an example as well. Okay, so if you're comparing companies, right? You're managing director. Hey, can you pull multiples for these 4 companies, right? And you pull multiples for last quarter or most recent multiples for Exxon, Chevron, Shell, and BP, and you had to manually do them because that's how the team does it or whatever. And one of them is Exxon's 10, Chevron's 12, Shell 15, and BP's 30 times multiple for the same industry, for comparable companies, similar, basically exact same business line. Something's off, right? So you need to investigate that a little bit further. So these are just kind of processes. These are just items to kind of get you to start thinking intuitively about the numbers, right? Everyone just likes to know how to get to the numbers, but we need to understand what do they mean. And this is a very good way for you to distinguish yourself from the rest of the competition. People know how to get, people know what the 3 primary valuation methods are. People know how to get to a discounted cash flow. What people don't know is how to use that. What does it mean? What does it imply for a company to be trading higher than its competitors or significantly lower than its competitors? Okay, and I think that was my last slide, I believe. I don't think I have anything else. Yeah. Okay, so with that, I know we're almost done here, 12 more minutes. Are there any questions for me? And Oliver, I don't know if you want to open up the lines or whatnot.
Yeah, I'm back on. Thank you so much. That was very in-depth. That was helpful. Thanks. I'm going to start it off with a question that I had, and then I've got a couple more that were submitted before the call. But priority will go to those who are on the call now. So either press star. Actually, at this point, why don't you just put if you'd like to just have me ask your question, just put the question in the chat box. And if you'd like to ask it yourself, just put your name in the chat box, and I will prompt you to deliver it. And we'll do it that way. So one question I had for you, Richard, is you mentioned that there's kind of this careful balance that one has to strike, especially with these technical questions, of on the one hand knowing them cold and understanding how to think through them on the spot, but on the other not appearing memorized and not being too kind of stiff or stilted in the delivery, even if you know exactly what you're going to say. And so I would just say, I guess I wonder, in the pursuit of that kind of confidence, what did you do to learn some of these different exercises? Is it studying it on your own on paper, or does that lend to a certain kind of memorized nature, or is it doing it with friends, or is it teaching somebody else how to do it? What's the best way to kind of master those skills where it comes off both very deeply understood, but also polished and kind of, hitting on the marks that you're talking about?
Yes. No, that's a really good question you brought up. So what I've done myself historically, and I still do this for interviews and whatnot, you want to understand the content very well on your own. Explain it to yourself. Understand the content first and foremost. Once you've understood the content extremely well and you can explain it to yourself, what I've done next is I answered the question to myself, but in bullet point format. At least the key points, or answering the questions, the 3 key bullet points. And then when I'm in the interview, I know I have to say those 3 things. But those 3 items, those 3 bullet points is not all that I know. I know a lot more. That's in my back pocket. So I mention those 3 things, but as I'm interviewing, I can gauge how much more of this back pocket knowledge I can throw into the mix. So you know the answer to the question, but you also have back pocket information that you can mention that makes the conversation much more natural, as opposed to just listing off, here are the 3 primary evaluation methods. At that point, you say, hey, these are the 3 primary evaluation methods: trading comparables, precedent transactions, discounted cash flow analyses, but, my understanding is blah, 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 blah. You can throw in a little bit of back pocket information at that point. So that's what I've done, is I summarize it to myself in short bullet point formats. But I know that I have a lot more knowledge than just those 3 bullet points that I can bring to the conversation.
Gotcha. When you were practicing on campus, and this could be true either at the MBA level or at the undergrad level, was it something that you would do in groups, or would you always start individually and then translate to doing it kind of in a group setting or in a more practice setting, whether it's with, an upperclassman or with, actual, the Career Center, which often offers these kinds of mock interviews?
Yeah, yeah.
Is there a balance there between priority, what's most important, what should be done first?
Yeah. So, I'll start off with the disclaimer that obviously this is a very obvious statement. It depends on the person. But for me, I definitely want to practice it myself. I need to internalize it first before I start practicing with a group or friends or Career Center, because you want to feel confident with the answer yourself first. And so I would write down the answer to the questions, repeat it to myself, say it to myself, and then at that point, you can practice with friends or the Career Center or current employees at the company that are not directly tied to your acceptance. And I think that's a good balance. But it depends on the person. I know some people, for me, I don't have to practice too much with other people because I'm a very conversational type person. I speak a lot. But some people that might be more introverted perhaps might need to practice with themselves more first and then open up to everyone else.
Cool. We got a question from Jay. What was the most unexpected question in an interview that you were faced with, and how did you handle that? So I guess one way of making that a little bit more specific, so you can answer it broadly, but also if there's some kind of wacky, more technically oriented question that you've ever gotten that was just you'd never heard of it, then how'd you deal with it? You mentioned this before, but we'll do it again.
Yeah. Okay. So this is a really, really good question that Jay just asked. And I'll tell you, I got this question wrong right up front because it was the most unexpected question. But I handled it in a way that I think produced the right outcome. So I was asked, and I don't remember the details entirely because it was such an unexpected and terrible question that I don't remember all of the details. But basically, this individual was asking me about minority interest and how that applies in an M&A situation and how that gets treated by accounting standards. It was a very specific question that I have no clue. I mean, at that point, I had enough knowledge to do the job, but I don't know minority interest accounting with regards to M&A practices. It's just too specific, right? And so, what do you do in that situation? You have to. Well, first you come off confident and honest, right? You say, to be honest. To be frank, whatever you have, I'm not entirely sure what happens in an M&A situation in which minority interest needs to be whatever through these accounting standards, blah, blah, blah. But what I do know is the second half of your answer is kind of saying, but what I do know is that minority interest is blah, blah, blah. So you turn a question into, people appreciate honesty. So if you don't know the answer to a question, just say it up front. But then say something related that you do know. So they're like, oh, okay, he didn't know how minority interest gets treated under accounting standards for an M&A acquisition. But what he does know is the minority interest shows up on the income statement, whatever, on this line item, or minority interest gets calculated this way. That, I think, helps you out tremendously, and it redirects the conversation in a more positive way.
Cool. Any other questions? Otherwise, I'm going to chime in with one last one that was, actually, we'll do it this way. I will ask one more question, and then we'll have space for one more if anybody would like to submit. So this is from Maria from Notre Dame. She asked, what are the best questions to ask the interviewer? And so, this is probably in line with what you experienced over the summer going through the accelerator with students. We really emphasize, at least Modern Guild does, the idea that every interview and every conversation with a potential employer is really more of a balanced playing field than students often understand or perceive. It's not just, I want you to like me and to offer me a job. It's also, do I like you? It's an opportunity to get to know the company a little bit and to get to know the culture and the way that they're asking questions.
Yeah.
Sorry, I just heard a very strange sound from my phone. And so I think in that vein, are there any questions that you like to ask employers or during interviews that have worked for you?
Yeah, good question. So I think obviously it's going to depend a lot on who's interviewing you. So if you're being interviewed by a managing director, the types of questions you're going to ask them to show your interest are going to be very different than the types of questions you're going to be asking if an associate is interviewing you. So keep that in mind. You don't want to ask like analyst associate level questions to an MD, and you probably don't want to ask MD level questions to an associate. That's first and foremost, I think. But let's say most of you guys are probably interviewing with associates or VPs, maybe one MD here and there. I'm going to take an example of an associate or even a VP. You might ask, hey, I'm really excited about this opportunity. Is there anything that let's say you're interviewing with an associate, right? They're a younger associate. They can relate to you being in college. You might ask them and say, hey, are there any classes or resources that you leveraged when you were in college to best prepare you for the internship? That's one. And that kind of shows that you're highly motivated, you're showing interest, and you're getting the other person to talk about their past, which most people like talking about most of their past. You can ask them that. If you're talking to an MD or VP, you might ask them, hey, I see myself in this position. I see myself joining, long term, being in investment banking, what have you. But what's something that you like the most about your career, and what's something that you like the least about your job? And I've gotten that's a really good question. Or I've gotten a lot of those when I've interviewed. They kind of stumble, but they kind of like being stumped, I guess. So you can ask them, what do you like the most and the least about your job? What most rewarding and least rewarding, I guess. And they like that. So anything along those lines are pretty good, I would say.
Nice. All right. Do you have time for one more?
Yeah, I think we have one on chat, right?
Cool. Yeah. So from Amol at Rutgers, do interviewers typically have a set amount of questions they will definitely ask each candidate, or is it possible to divert the conversation away from technical?
That's a really good question.
I answered the first question as well.
Okay, that's a very good question. I would say interviewers have enough questions in their little sheets of paper that they bring into the interviews to keep you busy for a long time. They won't run out of questions, I'll tell you that much. Do they need to ask you a set number of questions specifically? I don't think so. No, they don't need to. I've been in situations in which, you crushed the first first five questions. That's it. They won't ask you anymore, and they'll start asking you personal questions or more, personal questions or more, what are the other behavioral questions. That's if you're just like very stellar and they're like, okay, I don't want to waste my time asking this guy any more technical questions. But it also depends on the interviewer. Some interviewers are just very, very quantitative and all about the technicals. So it'll be tough to redirect some of those people. And some of those people, Amal, you probably don't want to redirect because you'll probably piss them off even more. If you try to redirect them away from technicals, they'll probably get more upset. Because there's people out there that would just want to ask technical questions. But yeah, I think those are really good questions you're asking here. It just depends on the situation.
All right. Well, it is 9:00, so I think with that we will wrap this up. Thank you again so much for your time, Richard. That was great, and for being so sincere in your analysis of technical questions and how to tackle them. Any further questions that people have for Richard, you can submit those to info@modernguild.com, and we will package those and pass them along to him where appropriate. And I don't know if you had any way that you like, if people can connect with you on LinkedIn or something like that, Richard, but that was already shared, their profile, so I suppose they could if they wanted to.
Sure.
But anyway, that's the best way to do it, is just submit questions that way. And then stay tuned. We've got a couple more events before the holiday season is upon us, and obviously many of you are going into finals now, so good luck, and we'll be in touch. Thanks again, Richard. Have a good night.
Thank you. Take care.